Hey, Mark Bushy here, man of real estate. I get asked all the time, hey, Mark, do I need 20% down to buy a house? The answer is no. Stay tuned and we'll discuss further. All right, so I get people approaching me all the time, that are interested in buying a house, but they just tell me, hey, Mark, I don't have enough money saved up for this. I don't know that I can afford to buy a house right now. And people have heard, that you need a big down payment. The number 20% gets thrown about all the time. Well, the truth is, you can buy a house for little or no money down at all. You can actually buy it with no money down and very few fees. And so let's discuss what some of those fees are and what some of the costs are up front here. And then we'll talk about some of the types of financing and some of the assistance that's out there to help you buy a house. So when you buy a house, you find the right property, we go put a contract out on the house. The first thing they're going to want is earnest money. So earnest money is just basically a small deposit on the house. The reason they want this is because they want to make sure that you don't just walk away from the deal for no good reason. We write different contingencies in the offer that allow you to back out. But they're going to want a small down payment, and typically a rule of thumb is like 1% of a house price. So you're buying a $200,000 house, you're probably going to put $2,000 down, and that money is going to get held by usually the listing brokerage, whoever's selling the house, or maybe even the title company. And that money is going to go toward your down payment in the end. But that's just a little bit of security for the seller, just so that they know that you're serious about the offer. So that is some money up front that you will have to have, and that's going to get deposited. You're going to have to get that check will get cashed. But you'll get it back at closing as a credit. So the next thing we do is once we have the offer accepted is we're going to usually ask for an inspection. For the last couple of years, while all this craziness going on, a lot of people were waiving the inspection just to try to get the deal done. There might be 10 offers on a house, and the offer that doesn't ask for an inspection may get the deal. I never recommend people skip the inspection. I always recommend it. I have several professional inspectors I work with that do a great job. There's a cost, so if you do a typical inspection on a house, a single family home, they're going to charge you typically around $350 to $400 for an inspection. They're going to go through the house inside and out, check all the different, the furnace, the appliances, the roof, everything they can find and look at, and give you a report on the house there. So that is a cost to you that is not going to get refunded, but it's kind of a little insurance policy to make sure that things are great in the house. In addition to that, you may do other inspections along with that where you have the sewer line scope to make sure that the sewer doesn't have any damage or, like tree roots growing in there. You may also want to do a radon inspection to make sure there's no radon gas in the house. Those are additional costs. So these are, the earnest money, the inspection are costs that you can't really avoid. If we get past all this, the bank that you're working with, assuming you're getting a loan, is going to ask you to have an appraisal done. They're going to require it actually. And that's a cost to you. It's one of your many closing costs you'll have. And typically a bank appraisal is going to be around that $600, $700, $800 cost. And that is a cost that's, they charge you at time of ordering the appraisal. But what we do is we can ask the sellers to pay some of your closing costs. So you get, reimbursed for that appraisal. You'll get some of your costs like the origination fee for the bank. There's recording fees, document fees, there's title company fees, there's title search done on the property. There's a handful of different fees that add up, and they can be fairly significant. It can be as much as 2 or 3% of the purchase price of the home. You're also prepaying for things like your taxes and insurance, and so they want those paid up front so that they know they get paid for. So on a $200,000 or $300,000 house, you may have closing costs, going from $5,000, $6,000, $7,000, $8,000, $9,000, and those are costs out of pocket for you. But now that real estate has gotten back a little more normalized, we are asking sellers to cover some of these costs for us, whether it's all of it or part of it. This is a great way to get a lot of these costs off of your hands so you don't have to pay for these things. Before COVID, before the crazy low rates, it was very common to ask for these kind of things. When COVID happened, when rates went rock bottom and we were doing multiple offers on every deal, very rarely did you ever get closing costs covered, but we're back to seeing that again. So these are a lot of expenses that you don't have to deal with. Beyond, the closing costs, let's talk about different types of loans. When you talk about the 20% down, you're probably talking about the standard conventional mortgage. This is what you probably are familiar with hearing about, parents had that conventional mortgage. But 20% down was kind of a standard for a while. And then they had different creative ways to get down payments done where you might only need 10% and they get a second 10% mortgage. Well, now it's very common to see conventional loans for as low as 3.5 to 5% down on the down payment. So way, way less than 20%. A second type of loan is a FHA loan. It's Federal Housing Association. And what that does is that's actually a government secured loan. And they require 3.5% down as well. So again, nowhere near 20% down. But to take it even down a notch lower is two types of loans that require 0 down. If you are a veteran, you served in the military, and you qualify for a veteran's VA loan, you can buy a house for 0 down. And of course, how great is that? You'll have your closing costs and whatnot, but and maybe get those paid for by the seller. And in that case, that earnest money you put down up front will actually get reimbursed to you as a credit. So you may actually walk away from a closing table with money in your pocket. Same with a USDA loan. Most people think of the USDA as like, the organization for the government that inspects your meat, your produce, that kind of thing. But they actually do rural housing loans. So if you're in a certain population, like smaller city, for instance, Fargo Moorhead here does not qualify, but if you get out to Horace, Horace does qualify for most parts of the city. And there's income requirements. There's different, requirements for that as well. But 0 down again. So, I mean, what an amazing way to buy a house. You can get 0 down loan, hopefully get your closing costs paid for, and have very little cost to yourself up front. Another thing you can do is with the state programs we have out there right now, especially North Dakota, is there is assistance for first-time homebuyers. And they will pay up to a certain amount, a dollar amount of your down payment on your house. It's not a grant, it is a loan. It's a type of loan. Basically what it is they'll give you a certain amount of money up front to help with closing costs, with down payment. And you do not pay that back for the first 8 years, as long as you own the house. If you sell the house before 8 years is up, let's say you sell it 4 years in, you're gonna have to reimburse half that money back to the state at that sale. But if you live there the full 8 years, that whole loan is paid off or forgiven, so you're not paying anything back. Minnesota has some similar programs. They do some assistance. They work a little differently, but there is assistance there as well to get this down payment covered. So also different lenders, credit unions, banks, mortgage companies have different first-time homebuyer programs, sometimes within their own bank, sometimes cooperation with the state, but they're helping you with this down payment here. And boy, there's a lot of creative ways just to get a house with little or no money down. So yeah, get this idea out of your head that you need 20% down, that you need this massive, nest egg saved up for a down payment and closing costs. There's ways to get this taken care of. And, I'm here to help you out. If you want to learn more about this, be glad to buy you a cup of coffee. Let's go grab lunch, whatever it is you want to do, meet for a half hour, 45 minutes. We can discuss all these different options. I'd also be happy to introduce you to one of the many trusted lenders that I work with. They can give you some more details, a little more detail than I have, because the lending practices change constantly. They're always being updated with different federal regulations, and the loan programs change. So they can get you, better information there that way as well. So reach out to me, give me a call, 701-793-8543. Shoot me a message or even comment here in the video, and I'd be happy to meet up with you. And let's, wouldn't it be awesome to get you a house and have no costs out of pocket for that? That'd be pretty incredible. So look forward to meeting up with you and helping you buy a home. Hey, thanks so much for checking out my content here. If you found it valuable or informative, please hit that subscribe button below and click on that bell to get notifications of any new content I upload. And if you know someone who's looking to buy, sell, or invest, I'd love it. I'd be so appreciative if you would share this channel with them, get them some information that might be useful for them. Thanks.